Welcome to Bears in Exile. Today is November 11th, Friday, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And today is also Veterans Day, so I hope everyone had a nice Veterans Day, and to all my brothers and sisters out there, either who have left the service or continue abroad, I hope you had a fantastic day and appreciate all that you've done and all that you are doing to keep us free. Now, going right along to the market. You know, we've been doing this little two-step with the 200-day moving average, and it is absolutely maddening. If we would just pick one way up or down or whatever, we just need a definitive break. This is getting so old. We've been doing this now for 2 weeks, where it crosses one way, crosses the other way, and back and forth. And anyways, it doesn't mean we don't have anything to work with. It just means that it makes it more difficult. So, Veterans Day, holiday, nobody was at the market, and they were able to push it all over the place. 200 and almost 60 points to the upside on the Dow. And here you can see it, went right through the 200-day moving average, really screwed up the middle Bollinger Band being above all of the short-term moving averages. But that's okay. You can see that we have this previous high and then another high. And today did test this previous high, but it did back away from it. I made a little trend line there. And yeah, just kissed it right on the nose and backed away slightly. So the question becomes, does it reverse from here, or does it bust through it and take them all out? Well, let's take a look. With the almost non-existent volume, we had uptick on the CCI. We had the stochastics kind of thrown for a loop, uptick on the RSI, slight uptick in the MACD histogram, remaining in negative territory, and an uptick on the MACD itself, also remaining on the bearish side of the cross. Downtick on the 14-day RSI. It's going to take a heck of a lot more to turn that sucker around, but it is pointing down. Just for a little flavor, we don't have a new high, but I'm going to look at the 60-minute anyway, just to get a feel for where this should be going. On the 60-minute, you can see what happened during the day. It went way up, and it just stopped. And yeah, that was really boring after the opening move. It was just a boring day. You can see the excessive separation in the short-term moving averages. We do not have a downtick yet in the 60-minute time period. And you can see that the stochastics are very high in overbought territory. You can also see that it was strong enough to move the 14-day RSI moving average up. And RSI massively high. MACD histogram getting very high, sloping down. MACD itself pointing up. But the majority of these are quite high. And a reset of those means dragging the daily down slightly. And all that the daily needs is slightly at this moment. So unless we get some NDE that takes out to this high and the previous high, I do think that the bulls are in trouble. We are not going to know till Monday, and needless to say, they do not have much to overcome to do so. So, but if those two are taken out, I expect the bears to be very worried, at least for a very short period of time. SPX, well, SPX did not get to the 200-day moving average, and if it were to turn around at this moment, that would be nice and clean. So hopefully that'll happen. But we still have the middle Bollinger Band line above the short-term moving averages, and of course we're still below the upper price consensus level. If that is taken out, the bears are definitely in a world of hurt. We aren't going to know till Monday. Uptick on the CCI. Stochastics are mixed. Uptick on the RSI. Slight uptick in the MACD histogram. MACD still with the bearish cross. 14-day RSI moving average, the most important one, still pointing down. Moving on to the VIX. This one just got kind of beat up today. I mean, big old huge gap down. We ended with you could call it a doji star, you could call it a miniature spinning top, but regardless, it's an indecision candle, kind of like, how did I get down here? So we still have the middle Bollinger Band below the short-term moving averages. Short-term moving averages are pointing down. We do have a flat line of the long-term moving averages. We did gap below the major price consensus level. Downtick on the CCI. Stochastics trying to roll over 14-day RSI moving average pointing up. Slight downtick on the RSI. Slight downtick on the histogram. And slight downtick on the MACD staying in positive. So this isn't bad at all. I'm still of the opinion that as long as we hold the 200-day moving average, by the time the up move is finished, we're in good shape. Certainly it has some room to move, and certainly it closed above the very important, psychologically important $30 mark. And at one point today we were below it, which was pretty troubling, but we ended up above it, so that's good. TNA, still doing the little double flat line dance. You can see that we still have the middle Bollinger Band above the short-term moving averages. The bearish bar is still continuing to collapse, and nice green bar today. Very nice. But you'll notice, actually, let me go back to the VIX. There's the VIX again. There's a low, higher low, potentially higher low. Going back to TNA, high, lower high, potentially lower high. I don't think even with today's move that this is especially bullish. Uptick on the CCI, downticks on the stochastics even with the move up, downtick on the 14-day RSI moving average, side tick on the RSI. We still have the bearish cross on the MACD, and slight uptick on the MACD histogram, remaining in negative territory. So really, am I impressed by today's action? Well, by the numbers, it is impressive, even though it was a holiday and massively low volume, but and I wasn't impressed by the Euro news, personally. UUP, I'll get to that more in a moment. Big red day, had a downtick. It was met intraday. We did gap below the major price consensus level, and it looked like it was trying to attempt a test of the 200-day moving average once again. Middle Bollinger Band below the short-term moving averages. Downtick on the CCI, downtick on the stochastics, uptick on the 14-day RSI moving average, downtick on the RSI, downtick on the histogram, and a ever so slight downtick on the MACD. And this to me on the dollar is not a bad deal, because we were below the bar, we came through it, we did a messy kiss while we were still inside of the bar, we bounced off of it, and now we've come back for a proper kiss. So long as it bounces off at this point, it's really good. Certainly it could fail. Certainly the bulls could be right, but not bad. I also like, actually, that the stochastics were getting really high, and we had the 14-day RSI moving average just starting its ascent. Having these reset some, to me, is a good thing. I would much rather have the stochastics with the 14-day RSI moving average. Certainly where the candle is at the moment is not a good place for the stochastics to do a complete reset, but having them outside of overbought is a good thing, in my opinion. FXE. I was not impressed at all with the news out of Euroland today. They're making a big hoopla about it. Oh, Euro's going to be fine, blah, blah, blah. I don't buy that for a minute. And what can we see here in the chart? Well, It doesn't look like it's in any condition at the moment to attempt a run at the 200-day moving average. We still have the middle Bollinger Band above the short-term moving averages. We still have some left of the bearish bar still hanging around. We did have an uptick today. It was resolved intraday. Uptick on the CCI, the stochastics, the RSI, the histogram, side tick on the MACD. 14-day RSI moving average still pointing down. All that room to move. So, and even with the move up today, yes, it pierced the major price consensus level, but look where it stopped. The major price consensus level. So being below it is not a good thing for the Euro bulls, and if we're going to have a failure against the bar at this time, that's going to look really, really poor. You can notice that we have the major price consensus level for the previous month. It didn't touch it today, and we have the lower price consensus level for the previous month and the current month right over here at 135. Very interesting that we've been saying for weeks that 1.35 was the correct price for the euro, with the condition that it was semi-stable. I mean, you're not going to have a stable euro for a long time, and that we would have some overshoot, and if euro was actually collapsing, that would be overvalued. Well, today there was a couple of stories that euro's current valuation should be 1.34 and 1.33. So if it does meet those targets, I would consider that to be the overshoot. So very interesting that that would come out today, and we've been saying that it's going to be lower than 135 for a while now. Just think that's pretty cool. And moving right along to GLD. Yeah, it had a nice day. We had said on the previous video we had met the downtick target. So now that that is resolved, seeing it go up is a encouraging sign. It really is. We don't have the middle Bollinger Band below the short-term moving averages anymore. Perhaps that will change if we get a nice run and challenge the major price consensus level for the previous month and break it. Uptick on the CCI, stochastics pointing down, 14-day RSI moving average pointing up. Uptick on the RSI getting pretty darn high. Very slight downtick in the histogram, slight uptick in the MACD. And we were saying that it was possible that people were liquidating over the past few days the gold to cover some positions. Perhaps that is over with, perhaps it is not. But regardless, it also seemed like it was very possible that the movement of the dollar was trumping the risk section of gold. Perhaps now that is properly reversing and getting back to risk and not so much the price of the dollar. But yeah, the dollar was down today, gold was up today. Maybe that has not completed yet. I do think that we will see a complete price correlation reversal between the price of the dollar and the risk going forward. Thus, I think gold will be going up, even if the dollar is. SLV, poor man's gold, very nice, still hanging out in the long-term moving averages, collapsing the bearish bar, and at some point I think that we will have the breakout and it will test the 200-day moving average. We'll have to see what happens at that point. The 14-day RSI moving average is getting to overbought territory. The stochastics are mixed. Uptick on the CCI, side tick on the RSI, slight downtick on the MACD histogram, and a slight uptick in the MACD itself, ever so slightly. So this is fine. We want the bar to collapse, and we want there to be a move before we have a double flat line. That is what we're hoping for. And there it is. Very, very nice, almost convincing move by the bulls today on the Dow. And I'm so ready for the weekend news on the euro to come out and so ready for Monday to come rolling around. So we'll finally have, hopefully, our answer to the market. But Monday will get here and then it'll say, oh, we need Tuesday and Tuesday and then Wednesday. And anyways, that's life with the market. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Have a great weekend.